Good evening, good evening, good evening to you all who are there. I still see one person, but I hope some of you are still coming in. Otherwise, welcome. Can you please tell me if maybe you can hear me? If you can hear me, please just type. If you can hear me, please just tap in the meantime while we're waiting also for others to join. Otherwise, welcome back again. And then also welcome to all of you guys who might be new. I welcome you all. And yes, this is what we do. Every single Thursday, this is what we do. And we're not gonna stop. We're still gonna go very, very far. So to you guys who are actually coming back for the second time, third time, I welcome you guys. I welcome. And if you remember the first day, I told you guys that we're gonna be one big happy family. And I'm sure some of you thought I was joking, but by now, look where we are now. We are really, really, really far. So otherwise, Funzo, can you hear me? So that maybe I can start right away, because guys, as I always tell you, this is only 30 minutes. It's only gonna take 30 minutes. And then after 30 minutes, I'm done. Then after 30 minutes, if anyone has a question, then they will ask after that 30 minutes, maybe for 10 minutes, then we do the questions and then the answers. Then from there, we're done. In case if maybe I didn't manage to answer some of the questions, you can ask them also in the YouTube, because this video will be recorded and then it will be posted in the YouTube. And I will share the link with you guys so that you can ask, and then you can also share it with other people. Okay, remember guys, sharing is caring. You can also share it with other people as well. Otherwise, what else? Nothing, guys, nothing. I welcome you all. So, okay, perfect. At least I can be heard. So I'm not gonna take too much time, but one thing I can assure you, with today's session, I can assure you that after today, if you don't know how to trade, after today, you will know how to trade, okay? I'm not just saying, I'm not joking, you will see what I'm talking about. So, guys, without waste of time, if there's any other person who has to join, they will join us when we are busy. We are not gonna waste any time. We're not gonna wait for anyone. We are just gonna start right away, because time is money. Time is money, guys. So we are just gonna start right away. All right, today's topic, what is it about? Today's topic is about candlesticks, okay? It's about candlestick. So I know there are a lot of questions surrounding candlesticks. And before I even start, if you check today's session, it's unlike the other days, okay, where I come here maybe with the presentation to you guys. No. Okay, today I decided that, you know what, yeah, this one, it needs some more of doing, it needs some more of doing, and then it also needs some more of me doing. Let me put it that way. So that's why it's more practical. Yeah, let me put it that way. It's more practical, more technical. So that's why I decided that, no, you know what, this one, I'm going to be more technical, so that at least you guys will be able to understand me better. So when I speak about candlestick, I know to people maybe who are starting with trading, it might sound like a strange word, a strange word, candlestick. What is it, and why is it called a candlestick? What do I use it for? Is it really necessary to use it? All those kind of questions. Those are the things that I will be discussing with you guys. Okay, I will be discussing that with you guys. So without waste of time, I'm gonna go to my whiteboard so that I show you what is it that I'm talking about. All right, as you can see, this is a whiteboard. First of all, when I speak, or rather when we speak about a candlestick, the reason why they're called candlesticks, I want you to hear me very well. It's simply because of their shape. That's it. That's it. Don't think of any other technical thing involved. No, no, no. The reason they're called candlestick is just because their shape, it looks like a candle. And then what is a candle? A candle is just a candle, a normal candle that you know. So when we talk about candlesticks in the chart, we will also go to the chart and then I show you. In the chart, you will see them. Yeah, in fact, you will see them also when we go to the chart, and then you will see what I'm talking about, that they also look like candles. That's why they're called candlesticks. Okay, so the main thing, however, it's not the name. It's actually how they form, how they form, and then how do we use them. So unfortunately, you cannot know how to use them better if you don't know how they form. Okay, so that's why I decided that, you know what, I need to make sure that I explain in detail how these candlesticks actually form. That's what I'm gonna do right here in this whiteboard. Okay, very simple. I'm just gonna draw these two lines first, the top and the bottom, and then I'm gonna make example with our normal pair, USD ZAR. I hope by now you know what is it that I mean when I said USD ZAR. We're comparing US dollar with South African rand. Okay, I think all of us, we are aware of these things, more especially early in the morning news, where they will say, no, the US dollar to rand is trading at, maybe they said trading at 14 rand. Okay, so I will take this top part as 14 rand. All right, this highest level as 14 rand, and then this lowest level I will take it as, let's say, 12 rand. Okay, simple up to this point, I hope. Okay, 12 rand, what does 12 rand mean? It just means the rate between dollar and rand. It's an example, or it's an example. If they are saying the dollar to rand, it's currently trading at 12 rand, this is what it means. Okay, it means it's sitting somewhere down here. And then if they said no, it goes up to 40 rand, it means it's sitting up here. Okay, that's what it means. So don't get lost as yet. All right, so the way these candles are produced, they're produced simply by this concept, by the way, simply by this concept. And they are more time-based. Let me not say more. They are actually always time-based. Okay, candlesticks are time-based. In other words, to create one candle, it takes a specific time. Okay, so here I'm going to use an example of 5 minutes. In other words, a candlestick which represents 5 minutes. When we said 5 minutes candlestick, what it means in simple ways, it just means that that candlestick was completed after 5 minutes. In other words, it took 5 minutes to complete that candlestick. Okay, that's what it means. So this is what I'm going to do. At the bottom here, that's where we have our time. Okay, 1 minute, 2 minutes, let's say 3 minutes. Then we have 4 minutes. Then we have 5 minutes. Okay, this is just time. It's simply time. Okay, so we're just showing you the time at which the trading is happening. So when now we create that 5 minutes candlestick, this is what happens. Let's say the market at start, let's say the market, okay, it's still fine. Let's say the market, when we're still in 1 minute, the market was actually somewhere here, right here at the top, close to 14 rand. Okay, this is what happened. As soon as people goes to the market and they said they're selling, this is what happens. The market will drop. Okay, as it drops, then after some 1 minute, then people decide, oh no, we want to buy. It goes up. Then after 2 minutes, maybe people are just saying, let's stay here. We're not buying, we're not selling. Okay, this is what happens. Then around 3 minutes, then people said, no, let's really sell this thing. This is what happens. So this thing, it's creating also at the same time a sort of a graph, okay? And then after 4 minutes, then the market said, people said, okay, let's buy a bit. They buy a bit. Then after that, people said, no, around 5 minutes, the people, and yeah, actually after around 5 minutes, you find out that the people are actually at this level, all right? So this is how, remember, I'm showing you how to create a candlestick, how they form. You will see why it's important. All right, so now when we have something like this, the most important things in the candlestick, it's actually where did they start, okay? In other words, we call it an open price. In other words, where they open. And then the next thing, it's actually the close. Where did it close? It opened here, it closes here. I think that's clear. I showed you, okay? Then we check the highest point where the market goes. We also check the lowest point where the market goes. These are the 4 important things to create, which we use when we are creating a candlestick. So now when we have this is what we do. We said, okay, this is our open, and then this is our close. Okay, so what we do, we take the high, the open, and the close. Then after that, we create that candle. This is how we created those candles. Okay, and then in terms of, I'm sure you have seen that they have different colors. Some you find them red, some green. Those colors, they are your choice. You choose, okay? But you must have the candles which are representing the market which is going down. Then we must also have the market with the candles which has a color which is showing the market going up. What does that mean? That means that, like in this situation where the market opens high, as you can see, it opens at the high level, close to 40. Then but by the end it closes, it was low. This indicates momentum, or rather, it indicates that during this 5 minute period, a lot of people, they were actually selling. That's why at the end we are closing down. That's what it means. That's what it means. And that is very, very, very important. Very important. You will see why I'm saying that. Okay, so this is how we create a candle, how candlesticks are created in simple words. Okay, I'm going to make another example now. First of all, let me first remove. Yeah, in the end, this is the candlestick you will have. So it means if you are saying that the candles which are showing momentum, which is going down, if you are saying those candles, you want to make sure that their color is red, example, it means this candle, you will see it as a red in color. That's why you see those red and green. So in other words, if by any chance the momentum was going up, and then I decided that, okay, I want the ones which are going up to actually have a green color, it means this candle was going to be green. Okay. All right. Let me make another example. Still with the USD ZAR, a simple one. We're still using USD ZAR. Now, in this case, remember, this is our lowest price, the highest price within these 5 minutes. Okay. And then let's say in this case now, the situation is different. All right. The situation this time around is different. You find out that maybe the market is starting, yeah, let's say it's still starting high here. Okay. It's starting here. In other words, when we are still in 1 minute, the price was there. Okay. And then during this process, just when we were still around 1 minute, people decided that, oh, they want to actually buy. Then they buy, market goes up. It goes to 14. Okay. Then after going to 14, then the market comes down a bit. Then people decide, oh, we want to buy again. Let's say they go above 14. Okay. Then people decide, let's sell now. They start selling. They start selling when it's around 4 minutes, people really sell that low, okay? Then after that, people start buying again. Remember, when we are selling, the market will drop, okay? When we are buying, the market will go up. That's what it means here. That's what I'm explaining it. Then market start going up. As it goes up, and then when we are, let's say around 5 minutes, then market decides to end here. Okay, now here in this situation, if you check, market opened here. Remember what I told you? That we have the open, you start with the open, okay? Then the following one is the close, okay? Where did it close? It closed here, as you can see, okay? Now, when you have these two lines, that's where you create your candle, all right? And then its color will be determined by where did it close. In trading, the most important thing is how you end, not really much about where you start. Yes, it's also important, but how you end, it determines the next move. Okay, so if you are ending with greater momentum or greater strength going down, chances are that you are still going to continue going down. Okay, that's what it means. All right, so in this case, if maybe again, I've decided that, okay, if momentum is going down, I need those candles to be red. Remember, guys, you can choose any color. It's up to you. Okay, for girls, you can still choose white or pink, or it's up to you. All right, so otherwise, then in my case, it will be red because I prefer mostly the ones which are going down to be red. It will be red. However, in this situation, we can see that we also have a level down here. You see, market came this low also. This low, okay? And then it also, at the same time, also went that high. All right? So those things that the ones that you find some candles having this kind of sticks. This is how these sticks are created. This is how these sticks are created. Then at the end now, we can remove all these other things. Then this will be your candle. Obviously, it will be red in color. Okay, this is how candlesticks are created. I think it's pretty much clear now. All right. Wow, this time is moving very, very, very fast. Yeah, it's moving very fast. So I think now it's pretty much clear. So it means the moment, if by any chance you are in the chart and then you see some small candles, those small candles are just showing you that the range was too small. I hope by now it's clear, as you can see. Yeah, because if the range is small, then automatically the candle will become small. Okay. Otherwise, what else? Let me make just one last example of this, also about the same concept. Let's say this time around we're starting down. Okay, we start down, market goes up. Around 2 minutes, market dropped that low. It went up again. It went up, 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 up. Then it went up to that high. Then it started dropping. Then let's say it closes somewhere here. Okay. Remember, the first thing to do, you take your open. Where did it open? It opened here. Where did it close? It closed right here. Okay. Now you can use this. You have your candle now. Okay. So the color in this time, remember, it started low, it ended high. So this time it's gonna be green. Okay, I hope we are in the same page. All right. But at this process, within these 5 minutes, when this candlestick of 5 minutes was created, we had this highest point. And then we also had this lowest point. So now you can draw your pins. You can have this pin. So this one now, as you can see, it shows that during these 5 minutes, the market had a chance to go really high, but it dropped very, very strongly down. So that's why they call it the rejection candle. In most cases, you will hear people talking about rejection candle. And most of the time, when this happens, it shows that there were people who were buying, but we had a lot of people selling. That's why they dropped the market this low. And it ended up closing this low, as I've showed you. Okay, so this one, it shows that, okay, maybe we are having some people who want to do it, who want to sell, who are more. Why more? Because of the way this candle ended, this candlestick ended. Okay, guys, I think now we gotta go straight to the real candlesticks. Okay, and by the way, this one, as you can see, it really does look like a candle. Okay, I think it's time for me to go to the real candlestick, and then and then show you the real candlesticks so that we are in the same page. Okay, let me close the whiteboard and then share screen with you guys. Okay. All right, perfect. This is one of the examples that I just took today. It's in the Euro USD, and I also used 5 minutes time frame here. Okay. By the way, when we talk about those time frame, I will show you also in the real thing. Okay. But otherwise, when we talk about the time frame, we are actually talking about a time at which actually the time which each candlestick took to be completed. In other words, right here, when we said M5, we are saying one candle here actually took 5 minutes to complete. Okay, so here are the candlestick in the charts, as I've showed you. And so I'm going to focus more on how to use them, more especially in this example now, how to best use them. All right, let's start. Because knowing how to use them, trust me, that's actually knowing how to also trade. Okay, yes, there's more in trading than these, but trust me, when you have these basics, if you really have these basics, I'm telling you, you already know. So let's start without waste of time. So here, when the market, when you see these red candles, it's because I told myself that, okay, I actually do the settings that all candles which are representing the strength going down, they must actually be red. The ones which shows the strength going up, they must be green. That's what it means. That's why you see here, it's only green. But the moment we actually have the red, they actually are going in a different direction. That's why it's like that. Okay, that's why it's like that. So let's start here. Here's the market. Let's say, okay, it came down, it went up. Now, when it went this high, remember our bonus, the one that I've been talking about. I spoke about the bonus from the start. I told you that if the price is too high, think now about what? Selling, not buying. So that's why we had this moment where the market was dropping, okay, because the price was too high. Okay, that's why we had this. Then the next thing, price goes high again. Remember, it's high. Now you must think about what selling. That's why we have this drop again. Then the market goes high again. That's why we have this again. So that's why I always emphasize that if the price is this high, pause a bit about buying. Okay, wait for it to first go down so that when it's down now, it's cheaper. Then you can buy it so that it can go up again. Okay, so otherwise, in terms of more especially how to use them, all right, this is another good example. Market went up. Okay, now you know that, okay, if it's this high, I don't just buy there. I wait for it to come down. Okay, you know that by now. All right, then it went down. What you do, you are actually waiting for actually the market to show you that, okay, we are starting to have another momentum or another strength, which is showing us that the market looks like it wants to go up again. Remember, up is represented by green here for me, okay? And down is represented by what? By red, okay? So in other words, when you're just seeing these red ones, they're just telling you that they still want to go down. So it means for your side, you are not doing anything, okay? You are not doing anything because you are waiting to buy again. But you just want the price to come down so that you can buy again, okay? Then it comes down. The moment you see this, that's an indication, okay? That's an indication to say, okay, you know what? We are likely gonna go up. So if you had bought here, you would have made money. That's how it is. That's how simple it is. Then, okay, let's say we are up here. Then you have this strong move. You can literally see, I mean, compare this red one with this last green. It's clear that the market wants to drop. It wants to drop down, okay? So then if it's here and then you are saying, okay, you know what? This strength is too much. It means this market wants to drop. And then you decide to sell here. Guess what? You would have made money. You would have made money. And then it drops. There it is. And then, okay, here it is. It drops. Then here we have this strong one again. Then you said what? Okay, I want to buy again. Is there nothing wrong? Is there anything wrong with? No, there's nothing wrong. You can see the momentum. Okay, you bought here. This one, yes, it would have given you small profit, then possibly take you out. It's fine. Remember, you don't always win here. You don't always win. Then here, the market tries to go up, but you can, sorry, but in this case, you can decide not to buy simply because you can see the strength is too much, and then this strength going up, it's small. Okay, but otherwise, even if you bought, yes, possibly you would have taken another loss. But the moment it comes down here, you would have bought, and then look at the profit. And then when do you decide that, okay, you know what, I think I should go down? The moment you see that, oh, I'm starting to see maybe the candles of different color, then you can decide that, you know what, I think I mean, imagine you bought here, then you are here, then you see this, and then you go out. This is money. This is money, guys. Okay. Then right here, it showed you maybe some sign that it wants to drop. Maybe you would have lost this one, but this one, you would have maybe made small profit, then take you out maybe. But after that, look at this one, momentum again, another profit. Guys, if by today you still tell me that you don't know how to trade, then I don't know. Yes, there is still some more advanced stuff than this. And unfortunately, most of the people, when they come to this business, they tend to go straight to the advanced stuff, leaving these basics. And at a later stage, you find somebody stuck with those advanced knowledge because they don't know the basics. Do not complicate things. Let it be this simple. Build up from these basics, because these basics, I'm telling you, they got it all. They got it all. Okay, guys, this is how simple you can use it. I told you how to use it to enter. I showed you. And then I also showed you how to use it to go out. I showed you that. Okay, so guys, I know there's still maybe some other things that I didn't manage to touch. I mean, it's a really broad topic, but otherwise I managed to make sure that I compress it so that all of you will be able to understand it. Okay, the other question is that, can you trade maybe without using this? Without using these candlesticks? Okay, now I want to answer that. All right. What I'm going to do, I'm going to stop sharing this, and then, okay, I'm going to share a different thing. Oh, just a minute. Okay. All right. Yeah. Perfect. All right. Yeah, this is a live chart. This is a live chart of USD ZAR, as you can see here, and showing 5 minutes. Okay. This M5 that we are seeing here, M, it just stands for minutes. Okay. 5, it just means minute, 5 minutes. Okay. So it means the moment it goes to M15, it means 15 minutes. It therefore means one candle in that one, it will be representing 15 minutes. In other words, to create one candle for that one, it will be 15 minutes. You can literally shift like this, you see, this is how they differ. This is how they differ. But otherwise, since we are talking about M5, we will stick with the M5. Okay. So the question that I wanted to answer is, can you trade can you trade without using candlesticks? The answer is yes. Yes, you can. It's just that it's a bit difficult. Why am I saying that? If you check here, these icons here, these ones, they represent the way you want your graph to look like. Remember, this is a graph, okay? So this is the candlestick. In other words, it's the one that we selected here. In other words, it's showing us that this graph is for candles. We are using candlesticks, okay? So if by any chance we said, okay, we want a line graph. Yes, line graph. Oh, as you can see, it's hard to now identify that momentum thing, if you remember. That's why I mentioned that those candlesticks are good as an indication of momentum. They show us that, okay, who is more strong between buying and selling? And if we know that, then we take that direction of whoever is strong. Because if you take that direction, chances are that you are going to make money. And that's exactly how to trade. That people who are trading and making money, they're doing that. Yes, there's some more advanced stuff maybe that they add up and all that. But trust me, it's very important to know this. So using the line graph, as you can also see, it's really hard to tell where is what. You know, like here, I can just say, okay, yes, the graph does look like it's going up, but the information is limited, you know, so that's why it becomes hard. But otherwise, there are people who do use it. They find it better. They find it better. So in short, yes, you can trade without candlestick pattern. However, most traders, even myself, use or rather prefer candlesticks simply because they show us a lot of details, like the open price, the close price, the highest point, the lowest point. Okay, I answered that question as well. All right, one last thing. I just want to also show you something here. All right, it's obvious in USD, USD ZAR. Look, the market went up, then it came down. Look at this momentum. What does this mean? It means the market opened here. Remember that chart that I showed you from the beginning? It means the market opened here and then strongly goes up and closes up there. By this shows you that there are a lot of people who wants to buy this. So even if, let's just say you buy here, and then you put your stop loss. I told you in the previous video about the stop losses. You put your stop loss here, and then you said your profit is here. Look, you would have made money. The market would not have taken you out here because it didn't reach. You would have made money. Like, even if you said, okay, I see this big one, I'm entering here and then putting my stop loss where? Right here, below it. Look, you would still have made money. Like I said, guys, the aim of this video was just to make sure that at the end of it, I don't want anyone to tell me that they don't know how to trade. I don't want that. If by any chance, maybe you're confused by some of the things, guys, first of all, go back to the first video I recorded, go to the second one, and then come to this one. After watching all these three, I can assure you that you will be saying, you know what, I know how to trade. Yes, I will take some losses, but I know how to trade. I know this is As simple as I can put it. Guys, that's it for me. I'm done. I'm done. All right. Let's see if maybe we have any questions. Any questions? We only have about 4 minutes. 4 minutes. Then yeah, 4 minutes for questions. Then otherwise, I'm calling it AD. Okay, let me stop sharing in the meantime. Okay, let's see. Any questions? I never thought this was going to take this long, to be honest with you. I thought it was going to be very, very quick, but yeah, it took actually longer than I anticipated. But otherwise, it's worth it. It's worth it. I don't mind at all. It was really, 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 really nice. Okay, it does look like we do not have questions today. Which it's a good sign. It's a good sign, but especially from a teacher, you know. So, you know, if you're teaching and then there are no questions, it can mean two things. Sometimes it can mean that people are understanding, or it can also mean that people were just not paying attention, which I am very much sure that in this case is because people are understanding, because this was very, very, very informative and very, very simple. Very, very simple. Okay. All right. Yeah, well, otherwise, without any waste of time, I'm calling it a night. All right, I'm ending the meeting. Please guys, do have a lovely, lovely, lovely evening. Cheers.